Very good afternoon to everybody, and welcome to the Rubicon Indicator training for Thursday, July the 14th, 2011. Busy day, couple of days here in the Forex market, guys. Hopefully everybody was paying attention, particularly the fundamental news, and we had some great examples of when to not trade when fundamentals are going a little crazy. We certainly had that in the last couple of days. Today's price action, I'm just looking at Euro USD 15-minute chart here, which shows the action for pretty much today. Mr. Bernanke was speaking on the Hill, so take a look at that chart. Very jumpy, very crazy price action. Some of these moves were, pretty scary stuff. That down move there in, 90 pips in half an hour, and then it proceeds to go back up over 50. This kind of thing was going on today. Spike here. A lot of spiking today, guys. So a lot of traders got caught, even professional traders, with some of these spikes. Again, reminds me of what we talk about all the time. When we have a red alert, when Bernanke speaking, for example, don't trade. Wait till the guy's done, get the overall sentiment, and then go back into the market. A lot I want to cover today, including some more information on fundamentals, but let's get back out to our basic training model, which is how do we use Rubicon. So essentially we always start, guys, out on the daily chart, and you can see I have some information already on my daily chart. Let me explain to you what I have going on here. Let me just get rid of some old. I'll take all this stuff off and we can redraw it again. Okay, first thing I want to do on the daily chart is bring it out to where I can see the price action. Now I'm going to change Rubicon just to clean up the chart. And anytime you want to look at a different time with Rubicon, in other words, what was it doing at such a time on a specific date, you can do that by going into the reserve column under properties and changing it here. I'm going to bring it to the most recent, this move here on the 12th of July. So that would be 7/12. We'll just go, I can't get a time. 1800. See, can I clean up that chart for a moment? No, that's the most recent wave. Let me go back in time. Sorry guys, bear with me one sec. I want a clean chart so I can show you what I'm doing here. I'll bring it back to, oh gosh, when can I go back? 7/12. We'll go back 2009. See what she kick in with that. No, I forget it. I'm just going to leave it alone for now. The daily chart's a little different to deal with than the 15-minute or the 5-minute. So what I want to do on the daily chart, let's just squeeze it, bring it out, make sure I can see. I like to see, at least a couple of years worth of trading, because I need the information from that. And the first thing I notice up here is that 150 level, right up there, and we see back in 2009. It played around with it for August, September, October, and November for 4 months, playing around with that level. And then once she realized it couldn't break through, we had this massive 3,000 pip drop. Other thing I'm noticing that's appropriate to where we're at right now, I see a resistance come support level right here. And look what happened yesterday. Let me pull that out just a little bit. What happened yesterday is that previous resistance level back in February became support 2 days ago, right here on that big drop down. And that's why I like to take a look at what these levels are. And the other level I see right here on the daily chart, this guy right here, and look where we are right now. Bingo, hello. Now let's bring this out. So you begin to see how quickly, it tried to break through that 140.70 level before, and that led to a drop. And where are we today? Right back at that 140.270 level. Now I also want to do the following. Get my trend lines on here. We're getting very close. I had almost made that trend line on that downward trend yesterday or the day before. Not quite, but almost. The other thing I want to do is look at a trend line to the upside, which is here. And a very important thing, no problem, Harry, good to have you here. A very important thing to notice, guys, is the pattern. So essentially the euro went up, tested the 150 level, and had a big drop back down. It came back up again. Second time up, it only made it to close to 147 level, dropped back up again, only made it to 146, close to 146 this time, and another big drop. In fact, Harry, who just dropped in, he and I were coaching on an advanced coaching session yesterday, and one of the things we talked about was, in order for this thing to drop further, it would need to recover off that bottom, and that's that bottom we were looking at yesterday, Harry. And sure enough, what did it do? It pulled back up over 400 pips. There's one other thing I want to take note of in here, and that's this little baby right here. So you can see the channel on a daily chart that we're in. And the thing that's holding it right now, that 140, close to the 143 level, is a resistance level from way back in November of 2010, coming back into play literally today. So I can garnish all that information just off my daily chart. Before I leave the daily, I like to do one last thing. Let's take a look at the overall move for the year and get a Fibonacci on that in the direction of the overall, the big move. Even though it's been trending downward, the overall move is up, strongly up. Now, let's take a look at what that fib is telling us. Hard to decipher here with all the lines I have. Now, let me change the color of the fib, actually, so you guys can see it also. There we go, white. Now, again, very, very significant, important thing to notice when we put the fib on, guys. Where does this thing stop? Right at the 38 fib, which is also combined with a previous resistance support level. When you see two of those things coming to play together, you really got my attention. Now, one other thing. Where are we sitting at right now? We're sitting at a previous support resistance level from way back, way back over here in November 2010, that also right now is corresponding with our 23% pullback, Fibonacci I should say, both holding it right now. Now look at all the information that we can garnish just off our daily chart. The other thing I want to note as well, and we'll see this on the 1 hour as well, anytime a currency moves an extreme amount of pips, like we saw this huge move up in the last year, at the very least when it reaches the top and starts pulling back, we will almost always see it come back to the 23%. Then it sure does. That's the first pullback. Right here, the 23. And that holds it for a while, it breaks through, comes back up, holds it again, breaks through, and then eventually makes it down to the 38. On a big move, most likely at some stage it will come back to the 38. Again, most likely is not 100%, but this is what happens all the time in Forex, these type of levels. Now, that's our daily chart. What do we do next? As we work down our charts, we I like to leave significant levels on the daily chart alone. Trend lines, support, resistance, just leave them there. Let's drop down to a 1 hour chart. And again, on a 1 hour chart, I like to see at least 2 weeks of trading. There we go. I will then do a Fibonacci in the opposite direction, but the prevailing direction trend that we're looking at right now. There's that really big drop of 750 pips. And you can see on that big drop, we have now regained over 50%, all the way up to the 61.8%. Now again, look what's in play. Fibonacci. Let's look at this baby. What's holding it right here? Two things, a previous support resistance level and the 61.8 Fibonacci. Again, very, very important stuff. Now I can leave the 1 hour Fibonacci on there. Now we drop down to our 30-minute chart. And we see all of those levels in play.
Buy signal occurred.
There's a new wave just coming in. We just got a buy signal coming in on the 30-minute, which, as you see, look what happened. It removed all the previous lines. Once we get a new wave, we let go of all the previous lines so we don't clutter up the chart. However, I'm going to bring back those previous lines for a moment. Rubicon Indicator, edit, 7:12. Let's get the time. That's July the 12th. I'll put it at, oh, I need to see, just one sec. 1400 hours is what I'm looking for. Indicator, Rubicon Indicator, edit, down to reserved, July 14th, 1400 hours.
Buy signal occurred.
I'm not getting it. All right, what am I doing? Oh, I'm doing it the wrong way around. I'm sorry, guys. I'm doing it the American way. All right. Rubicon Indicator, edit. I have to go the other way, the European way. 14th of July, 1400 hours. Sorry, I mix up between my continents and I've lived on both continents. There it is. Okay. So in that run-up yesterday, from the bottom all the way up to the top, we had some very nice trades on Rubicon. The first one came in right here. Take profit at 41.73, stop loss at 40.41. In two candles, it went right to our profit target on the 30-minute chart for 63 pips. The next signal came in right here. On this baby, it had a face of pullback of about 30 pips, and then she went 25 pips in your favor. And then the final one, nice clean one candle run up to the target of 30 pips again. No pullback, no stop loss. So you see how I like those 30-minute charts, guys. They're very accurate. I said before, you can drop to the 15 minutes only if and when you have you know you're with a serious trend. Now, let me leave Rubicon for a moment and talk about smart trading. And there are two very, very important things to do with smart trading. One is money management, and I'm going to talk about that in a few moments. The other one is absolutely paying attention to the world that we live in, the markets that we live in other words, fundamental news. And we had some very, very good examples of fundamental news here. Take a look at this. See, can I remember? I think it was yesterday. Let me go back 1 second. Okay, so we had this massive drop here from the open of the market on Sunday. You know, it kept going straight down for about 400 pips. As Moody's was talking about the further pressure on Portugal, then the ECB came out and announced right here that they were going to support Portugal. We got a push up. Right about here, Moody's came back again and announced that they were going to downgrade Ireland's bonds. More trouble for the euro. Down we go again. Then we get Bernanke coming in talking about easing up of pressure on the US, or in another word for QE3, even though he didn't say it. Weakness on the dollar. What happens? Bingo. So you see, it's very important, guys. That's just a brief glimpse at the last couple of days, but you see how much our market is driven by fundamental news.